We've all lived through some pretty wild times lately, but has anyone stopped to think that maybe history's about to drop a beat we haven't heard yet?
Well, Ray Dalio certainly has.
Exactly. And he's not just some Wall Street hotshot.
Yeah.
This guy's been studying history for over 50 years, trying to figure out the patterns behind financial markets. And you know what? He says those same patterns drive entire societies too.
He's basically saying what's happening in the world today isn't totally new. It's happened before.
Right. Dalio's identified these three major forces that are happening right now. We haven't seen them in our lifetime.
But they've happened before. And the results were pretty big.
Huge. So let's get into it. The first force, debt.
It's everywhere.
But Dalio says it's not just about how much debt there is, it's about how it's created.
Like when central banks print money?
Exactly.
Yeah.
Like the Federal Reserve here in the U.S. They print money and then lend it to the government.
It's like a magic money tree, but instead of growing fruit, it grows debt.
And that's where things start to get a little scary. Dalio says this is exactly what happened between 1930 and 1945.
A period we should be paying close attention to.
Because those are the rhymes we need to hear. What happened with debt back then that's relevant to us now?
Well, for starters, it led to inflation.
Which means more money chasing the same amount of stuff.
So prices go up.
Sounds simple enough, but then what happens when the Fed tries to bring inflation back down?
That's when things get tricky. They usually raise interest rates.
But doesn't that just slow down the economy?
It does. It makes it harder for businesses to borrow money, which can lead to job losses. It's a real balancing act.
So it's like a catch-22. You try to fix one problem, you create another.
Pretty much.
Okay, so we've got the Fed printing money, lending it to the government. How does the government borrow that money in the first place?
Bonds. They sell bonds to investors.
And what happens when they need to sell a lot of bonds, like when debt is really high?
Interest rates go up, makes it more expensive for everyone to borrow.
So this isn't just theoretical. It's affecting things like mortgage rates.
Car loans, business loans. It hits everyone's pocketbook in some way.
This is where it starts to feel a little too real. Dalio's second big force is the rise of populism.
We're seeing it on both the left and the right.
And it's fueled by this widening gap between the rich and the poor and all the political division that comes with it.
Dalio actually says it's even worse now than it was in the 1930s. Think about that.
That's a pretty scary thought.
It affects how the country is run, it affects taxes, it affects the value of things like houses and property.
And Dalio says the glue that holds society together is social cohesion. How do we get that back when everyone's so divided?
That's the million-dollar question, isn't it? He talks about the need for a strong center.
But how do you find a center when everyone's so far apart?
It's definitely a challenge, but one we need to figure out, and fast.
All right, we've got debt, we've got internal conflict. Now for Dalio's third force, the global power shift. After World War II, the U.S. was the big dog on the block.
We were the top dog economically. We had the strongest military, and the U.S. dollar was the world's reserve currency.
But things are changing. China's economic growth is undeniable.
Their per capita income is rising rapidly, and that's shifting the balance of power.
So what happens when that balance shifts? What does it mean for the rest of the world?
Well, military and economic power are pretty closely linked. When a country's economy grows, they often invest more in their military. And when you have big shifts in military power, you often see more international conflict. And then those conflicts have a ripple effect on things like inflation.
And supply chains.
Absolutely. Which, as we all know, affects prices and the availability of goods. It's all interconnected.
We are definitely feeling that in our wallets these days. So Dalio's painted a pretty stark picture here, but it's not all doom and gloom, is it?
No, it's a call to action. Dalio has identified 18 indicators of a nation's economic health, and he believes understanding these indicators can help us prepare for what's ahead.
Let's dive into those indicators and the potential solutions Dalio offers next time. This is a conversation we need to keep having.
Before we get to those 18 indicators, I'm really curious about this whole perfect storm thing. Dalio keeps talking about a perfect storm. What does he actually mean by that?
He's basically saying all these things we've been talking about, they're not just happening in isolation. They're all happening at the same time. And when they converge, when they all come together, that's when you get a perfect storm, a recipe for disaster.
Like a financial hurricane.
Exactly. He's saying high debt, wealth gaps, rising populism, global tensions, all of it. It creates this incredibly volatile situation.
It's like the world's on a tightrope and the wind's picking up.
And Dalio's drawing a direct parallel to the period leading up to World War II.
Not exactly a comforting thought. But the good news is, Dalio's not all doom and gloom. He actually offers some solutions.
He does. Like, how do we steer clear of this perfect storm?
Well, he believes governments have a huge role to play. He says they can maintain financial stability, even with all the crazy stuff happening in the world right now.
Even with climate change, wars, all the cost of rebuilding infrastructure? Yeah, how?
By focusing on smart fiscal policies, promoting economic growth, and tackling wealth inequality head head-on.
Easier said than done.
Absolutely. But those are the key ingredients, according to Dalio.
Speaking of ingredients, Dalio also talks about how the value of major currencies is dropping. The dollar, the euro, the yen. He says it's similar to what happened in the 1930s and the 1970s. What happened back then? What were the consequences?
People lost faith in the system. They lost faith in traditional currencies. They started looking for alternatives.
Like what?
Back then, it was mostly gold. But now, people are looking at things like Bitcoin.
Interesting. So it's like a flight to safety. When the traditional safe havens start to look shaky, people search for something else to protect their wealth.
Exactly. And that brings us to the individual level. What can we do to protect ourselves from inflation and all this economic uncertainty?
That's the million-dollar question for a lot of people right now. Dalio has some pretty specific advice.
He does. He says we need to understand the difference between inflation rates, real interest rates, and returns on investments.
So basically, we need to get educated. We need to know what we're dealing with.
And then we can start making smarter decisions. Dalio suggests considering things like inflation-indexed bonds, investing in essential goods and services, even choosing geographically stable locations as part of a diversified portfolio.
So it's all about managing risk, spreading your bets.
Exactly.
Dalio's message seems to be, don't panic, get informed, and take action. It's about understanding these historical cycles and making smart choices based on that knowledge.
Absolutely. It's about being proactive, not reactive. And most importantly, it's about learning from the past so we can create a better future. Let's dive into those 18 indicators Dalio uses to assess a nation's economic health. Without getting too technical, can you highlight a few where the U.S. is showing signs of weakness?
Sure. Some of the key indicators where the U.S. is showing signs of strain include its debt-to-GDP ratio, its level of internal conflict and political polarization, its declining share of global manufacturing, and the erosion of its reserve currency status.
Those are some pretty big red flags. What do those indicators actually mean for everyday people?
They suggest that the U.S. is facing some serious challenges that could impact its long-term economic prospects. A high debt-to-GDP ratio can make it harder for the government to invest in important things like education infrastructure and social programs. Increased political polarization can make it difficult to govern effectively and address critical national issues. A decline in manufacturing can lead to job losses and make the U.S. less competitive economically. And a weakening reserve currency can make it more expensive for the country to borrow money and finance its debt.
So these aren't just abstract economic concepts. They have real-world consequences for all of us.
Exactly.
And how do these indicators connect to Dalio's theory about the rise and fall of empires?
Dalio argues that empires tend to follow a predictable cycle. They rise to power through innovation, economic strength, and military might. But over time, they often become complacent, overextended, and burdened by debt. Internal divisions and external challenges weaken their foundations, and eventually they decline. He sees parallels between this historical pattern and the current state of the U.S.
So it's not just about economic indicators, but also about the social and political factors that contribute to a nation's resilience or vulnerability.
Precisely. Dalio emphasizes that strong economic fundamentals are essential, but they're not enough. A nation also needs a cohesive society, effective governance, and a willingness to adapt to a changing world. He believes that the U.S. is at a critical juncture where it needs to address these underlying issues to avoid going the way of past empires.
It sounds like a wake-up call.
It is. Dalio's work is a call to action. He's urging us to be aware of these historical patterns, to understand the forces at play, and to make informed decisions both individually and collectively. It's about recognizing the challenges we face, learning from the past, and working together to create a more resilient future.
Thank you for this insightful conversation.
Thanks for joining us.